Welcome, guys, to another edition of MEPS Speaking of Steel podcast. Today, as hopefully you're all aware, we're going to focus on overcapacity. We've got a title of Does Overcapacity Risk a Race to the Bottom for Steel Prices? So we're going to take quite an international view with carbon and stainless involved in the discussion. We've got Ewan Gilfillan, our data lead at MEPS International. Welcome to the podcast. Good to have you on.
Cheers. Thanks for having me again.
Pleasure. Jon Carruthers-Green, market researcher. Great to see you again. Regular face.
As always.
Yeah, familiar surroundings for you. And Kaye, MEPS head of pricing and forecasts. Welcome back to the podcast. It's been a bit of a wait for your return, actually, hasn't it?
Yeah, it's been a while.
Yeah, well, it's good to have you in the what is not so new studio now. But you'll be giving us some insight not only on the sort of the price trends, but also a bit of insight into the stainless steel market as well, which is, an area of focus for you, isn't it, with the research? So Great stuff. Great to have you all here. I'll start off by coming to you, Jon, as ever, for a bit of an outline, an overview of, this overcapacity issue, which is shaping steel price at the moment. What's been the catalyst of this, and how far have things developed to date in recent years? I guess it's China that we constantly hear about, isn't it?
Yes. So China, of course, is the big producer of steel. Over half the world's steel now is being produced in China. I mean, I remember back when I first started at MEPS, it was about 12 years ago, and I'd done my homework before joining, trying to find some of the stats and some of the figures out. And of course, I'm sat there knowing that China's still the largest producer in the world. But then I'm paired up with somebody who's a little bit more of an older, wiser hand. And when they're asking, where's all the steel being produced? Immediately I say China, of course. That's the number one producer in the world. And I just get a little shake of the head. And the answer, he says, is actually, well, it's China minus Hebei province. Okay, right. And then he says, where's the second largest steel producer in the world? Hebei province. And then where's the third largest producer in the world? Tangshan City, just one part of Hebei province. And I think it really shows just how much steel is produced in China. Like I say, this was 15 years ago. Since then, that outputs continue to rise. And it's only really sort of around COVID time that we saw that sort of begin to tail off a little. But then, of course, that was about the same time that we saw India production start to pick up. So these two countries now are, if we're not looking at little regions or little provinces, are the two largest producers of steel in the world. And certainly with China, we've got to the point now where the supply is far outstripping the demand. And that's where this overcapacity is really coming from.
Yeah, we're talking about supply outstripping demand. China is the producer. The rest of the world is the customer in a greatest sense, isn't it? And I guess that's the issue here.
Yeah, I think that for quite a while, demand was able, certainly in China, was able to keep up with this massive increase in supply. They've taken on their role as the world's manufacturer, the world's producer of pretty much everything. That demand has begun to tail off a little. And part of that's sort of structural, and part of that's actual sort of policy from the Chinese government.
Yeah, and Ewan, it's great to have you along. You've normally got your head in a spreadsheet when I pass your desk, but you've taken a look at some of the numbers for us with regards to this podcast as well. So you can give us a little bit of an indication how that demand and capacity trend has shifted over the years, I hope.
Yeah, Jon's absolutely right. China produces so much steel, but it consumes a lot of it as well. So a lot of the steel was going into the domestic market. But as demand in China has peaked sort of in 2020, demand is now falling, and there's still all this massive amount of steel production. So if you look at the amount of steel coming out of China in terms of exports between 2020 and 2024, the number of exports or the volume of exports has doubled. So the actual demand within China can't, it's not enough to consume all the steel that it produces. So yeah, that's why we're seeing, all this material kind of leaving and going to other markets. So,
And I guess that's the real shift, is that in recent times we've seen demand dropping off around the world, Europe, Asia, and the US. So there's just not capacity in or outside China to consume that steel.
No. And then that's kind of what we've kind of come together today to talk about is, how that is having an effect on prices. The thing is in China is that actually, the OECD did a great report on kind of overcapacity. And even though Chinese demand is falling off, there's still more capacity being put in. And so there's a bigger and bigger gap between what actual demand is and versus the capacity that's available to be produced. So,
Yeah, how much of that do we think is is that part of China's growth drive? I think Jon mentioned there the manufacturing and its strategy to build in China, build a manufacturing base. Is steel part of that? Is it a drive to increase GDP? Can they not take the foot off the gas now?
yeah, I think it's always kind of been seen as a strategic industry, for defense, for infrastructure, the kind of the urbanization of rural kind of areas. And the government injected money into the economy to kind of stimulate that. So through grants, through preferential lending rates that may not have been of offer to kind of other market participants, other kind of tax benefits. And yeah, that is to kind of fuel the growth, because China has historically had its economic growth come from the construction sector. And so it's really pumped a lot of money into that. The steel has been consumed in that sector for many, many years. And I think similar when we talk about India, there's a real strategic drive to, build infrastructure, and the government is trying to give incentives to do that. So yeah, it has been a source of economic growth, but also an important source of jobs and employment for people in many, because even when, if you think about the size of a steel plant, it's not just the number of jobs that are typically well-paying jobs, but it's also the people in the supply chain around the steel mill, and also all the communities that are around there. So yeah, it's as political, implications as well. So
Yeah.
So I think that demand that we saw in China, that's really sort of two parts to that. There's that satisfying the domestic need for steel. They've essentially from the late 70s until sort of about say 15, 20 years ago, you'd say they've gone through their industrial revolution. So they've basically developed from sort of the agrarian economy that they were before into now sort of as advanced as anybody else in the world. So there's that steel demand, basically building all the buildings and all that infrastructure. But then there was also the demand for the goods that they were going to export. That's where they got all this money from to buy all these, to pay for all of this infrastructure. And what we've seen is that domestic demand begin to tail off. We've seen that advantage that they had from being sort of a low-cost producer begin to tail off a little. Already, sort of some Chinese manufacturers, not necessarily of steel, but of other products, they're beginning to export jobs to other countries in Asia where they can actually get their labour a lot cheaper than in China. So I think these two factors are really sort of the main driving force behind this drop-off in demand.
So, Kaye, from the research that MEPS conducts daily, every day throughout the month on stainless and carbon, how much can we say overcapacity is having an effect on prices, and is that particularly acute now with the demand issues that we're seeing?
I mean, it's becoming more acute in China in particular. I mean, they're having to export their overcapacity, and what that's doing is that's creating trade issues around the world. So we're seeing more trade defence measures going in. So there's anti-dumping measures being put in, not just in Europe or the US, but also in other Asian nations. So they're putting up, measures in place to prevent Chinese dumping or Chinese imports coming in. So the Chinese exporters, they're having to look for other markets to export their, excess capacity to, because they need that income for their, economy. Otherwise, that overcapacity goes back into the local market, and that depresses their local prices. And if the Chinese prices go down, their export prices also go down, and then that ultimately depresses global prices. So what we've seen a lot recently or in the last few years, is that a lot of people have been looking towards China. They've been looking for that uptick in pricing. So they wait for that price increase in China in the hopes that it will lift global prices, and we just haven't seen that. So we've often seen an uptick in prices sort of February, March time after the Chinese New Year, and that seasonal surge just hasn't occurred really. So we've seen a lot of just little bits of upward movement, and then it just comes back down again because there's just oversupply, excess inventories, and the demand's just not there. So it's something that's really depressing the global market really for steel.
Depressing a lot of traders as well.
Yeah, exactly. So
I feel like when we read the Asian research, it's always going to be, next month or next quarter that demand will come back, and then when you get there, it doesn't return. So there's a lot of, this is typically a season of high demand, but it's not as high as it was, and then hopefully this after this holiday it'll get better. After this holiday, it never does. So
everybody's always saying, well, hopefully next year will be better. Well, then hopefully the second half. There's always this hope for the future. And then, like you say, it never seems to materialise, and then you just see the year after, or the next quarter, or the next half, that hope or that wish for the demand to improve just never seems to come back, and there's only so long that mills or traders or distributors and manufacturers can survive in a continual cycle of depressed steel markets before actually you start seeing companies go bust.
Yeah, so I think the government has taken measures to cut back this supply, just like they were able to sort of provide subsidies to get that there in the first place. They have sort of issued directives telling steelmakers to cut output. And it is actually slightly lower now than it was, say, in 2020. But what's happened is that demand's fallen off so much more than the supply. And until that demand comes back, we're going to be stuck in this overcapacity situation.
And isn't it reflective that, India, huge economic force in that Asian region, is also trying to increase its production, not only of carbon, but stainless steel at this point. So it's not just on China, I guess, is it? If they bring down their manufacturing, then, other countries might step in to fill, well, there's not a gap, is there? Let's be honest. But so do we expect, what do we expect to be the thing that breaks this trend of oversupply? Will it be the trade defence measures that we're seeing from Europe and from the US, or will it be countries' efforts to stem capacity?
I mean, we're getting a lot of complaints from people inside Europe. I mean, you say the trade defence measures, but most of those trade defence measures are on steel, not necessarily on the manufactured goods. So we hear a lot of people who are saying that their customers, so the manufacturers, are losing business to imports of manufactured goods. So they'll sort of, the stockists, for instance, the distributors will say, well, actually they've lost business because their customers have lost business, their manufacturers have lost business because they're getting imports now from the finished material now. And part of that is we've got, the CBAM coming in January 2026, and that doesn't include the downstream materials. It only includes, steel and aluminium, and it doesn't include the washing machines and things like that. So, you've got to think that if that doesn't get extended, then the manufacturing sector could get hit and hurt more going forward. Obviously what's going on in the US, that's causing a lot more issues over there, but that there's going to be some diversion going to other countries, and at the moment a lot of that's coming, I think, towards Europe, and that's going to continue with the announcement that happened on Friday night, and that's going to come in at some point potentially today. So
yeah, it looks like that's going ahead at the point we're recording this podcast. 50% Section 232 tariffs on steel now, and I guess that's just going to see an escalation of imports focus on Europe and other parts of Asia and South America, I guess. All over the world will be subject to an increased risk of overcapacity.
Yeah, and also push up the price of goods in the US as well.
Yeah, that it's something, John, that we don't often talk about, the impact of these tariffs on US customers, they may not have that same overcapacity issue in the US, but prices will go up, at least in the medium term, won't they?
That's what we certainly expect to see, especially with these very big headline announcements of 25% on this, 50% on that. There's no way that can really be absorbed for any more than, say, just a really short period of time. So as long as those tariffs are there in the US, the US producers would be silly not to put their prices up. If they can put their prices up, say 40% or so, and still undercut the competition. It would be silly for them not to. So as long as those tariffs are there, the US is always going to be a certain level higher than everywhere else.
Yeah.
But just going back to sort of that overcapacity, and I personally I see that sort of spreading away from China. Like you say, India's pushing their steel industry now massively. They've seen China. They've had this success. They want a piece of that too. I think they've got a target of 300 million tons output of crude steel output by 2030. I mean, that's 5 years away. I don't think they're quite going to hit that target, but they're certainly keen to.
They've always had high expectations, and they never hit it.
No, but what we have seen is a lot of new plants announcements in India. That's where we're getting the vast majority of these now. The ones that we still see in China, so we still see new plants coming online in China. But that's going to tail off. The Chinese government, they've decided they're going to step in and basically sort of hold off on any new plants that are sort of going to be planned. But the ones that have been in construction for the past couple of years, they're still coming online now. Whereas the Indians, they're actively looking to increase that even more.
And is that largely EAF, I guess? I'm thinking about, CBAM and the protection that the EU might get from that.
Well, in India, it's generally traditionally been the blast furnace because they've got local supply of iron ore. So generally, it's usually blast furnace that comes online in India. Although they do also have quite a large proportion of direct reduced iron, which is traditionally a little bit more, greener, I suppose. And they generally are then linked to electric arc furnaces. So I've not seen the split. I don't know if you've seen the statistics on what
the exact number. No, but what there is some EAFs being produced there, and there are some really large blast furnace plants. Like I say, that's where we're seeing the big numbers coming out now, but we are seeing some consideration for greener steel. So there will be a slightly higher mix. But once again, they're coming from a very high percentage of blast furnaces. So anything really is going to be better than where they were.
It's interesting you say about green steel because that's going to need a lot of investment, but actually overcapacity. One of the things is because there's so much excess capacity, the actual, the overheads of running these plants are, you have your fixed costs. But because there's so much extra capacity and the demand is not increasing with that pace, the utilization of those plants is lower. So per unit of steel that's made, it's more expensive to make. But because there's so much excess steel, prices are going to go down because there's too much of it available. So profit margins at mills are going down at a time where they need to invest into green steel making technologies. So it's actually coming at a double whammy. They're putting all more blast furnace technology in place. It's not as green. They need to invest in changing, but they're actually making less money because there's too much steel about. So it's a real tricky time for them.
And that issue seems to be most stark in Europe, I guess, doesn't it? Where decarbonisation is a huge topic. We talked in the subject of this podcast, about the race to the bottom. Do we think that's what's going to happen? Will those decarbonisation projects, will European producers with higher overheads pay the price for this overcapacity ultimately?
I think Jon has been more informed than me in terms of like CBAM, in terms of the leveling of the play field in that sense, by having some sort of carbon charge there to make the playing field more level. But I do think that the overcapacity is going to drive prices down because the gap between demand and what's available is getting bigger. There's going to be too much steel available. The cost base for the mills will be too high, so they have to, they've got these costs that they have to pay. but prices are going to go down. So they're not going to be profitable and they're not going to be able to invest. So I think there's going to be some sort of other market mechanism that helps mills, do that transition, I think. So.
Yeah, we've talked before, haven't we, John, in podcasts about this very thing, that the EU strategy to make energy cheaper, more accessible and help fund that decarbonisation. The pressure is really on right now, isn't it, at this time of low demand and high capacity? Those plans have really got to come to fruition quickly.
Yes, and I'm very much looking forward for my energy prices to come down, just like the steelmakers are. That's one of the big issues that they have at the moment. Just like Ewan says, we're trying to have this massive capital investment at a time when profit margins are low, and it really sort of scuppers the sort of the whole idea of it. What could happen is potentially one of the fears that we've sort of seen around sort of CBAM is that, say, this low emission steel ends up in Europe because that's where it gets the benefits, the tax benefits of not quite as much of a CBAM charge, whereas the rest of the steel that's a bit dirtier ends up being sort of supplied around the rest of the world where there aren't sort of carbon charges. So we could end up seeing this sort of a greater disparity between European prices than those in the rest of the world, almost like we see in the US.
Yeah, where prices, we would expect it might start escalating again now that those tariffs have gone up.
Yeah, well, I think we do expect the US prices to move upwards. I mean, at the moment, I know the futures prices have seen a big jump following the announcement from Donald Trump on Friday, but in the market, they don't seem to have reacted positively as yet, and they haven't started to move up. I know the Nucor CSP price was stable when they announced it on Monday, but it will be interesting to see what happens to the actual prices that the buyers are paying in the market when we do our research this month. It'll be an interesting one when that comes through. So.
It will. I mean, the US is a case in point when we're talking about adding capacity. They're looking to do the same. I know Donald Trump wants to see their capacity utilisation go up beyond 80%, which is not, I don't think it's been far off in recent weeks, actually.
It's just a bit below that, but I mean, it's below where the mills would like it to be. I think that's the thing, and there is still room for it to move up. There is still available capacity there. So there's no shortage of material in the US market, and that's both on carbon and stainless. So the buyers in the US are able to get the material if they need it domestically. They have no issues in terms of imports. So at the moment, I think there's no shortages in the market when it comes to this. It's more of demand's waning, partly because of the uncertainty with all the issues with new tariffs. Are they going to stay? Are they going to not? I mean, at the moment, he's still negotiating deals. He's saying he's going to potentially remove tariffs on some things and from some countries. So there's a potential that if you're a buyer and you're buying domestically, if you're going to accept, say, I don't know, a $40, $50, $100 increase from domestic mill, but it could potentially remove the tariff from your usual import supply, then you could pay more when you could have bought from your import supplier, say in Canada or Turkey or in Asia, and maybe have paid less. And that by the time it arrived, that tariff's been removed. Then you may feel a bit aggrieved. So you may decide, actually, I'm going to wait to see what happens, especially if you can afford to wait because you've not got the demand and you've got plenty of stock.
And those pricing disparities between domestic and import, it's the same in Europe, isn't it? You know, despite the fact that we've had revisions to the EU safeguard measures, the gap is still sufficient to make imports viable.
Yeah. I mean, when we've been looking at the Canadian price, for instance, versus the US price, you can see that disparity. So just on hot rolled coil, the hot rolled coil price in the US versus Canada, you can see that 25% difference because the Canadian mills aren't able to sell their excess supply into the US at the US price anymore. They've had to account for that, disparity in price. We've seen the divergence.
Decoupling.
Yeah, the decoupling of the prices, exactly. So, I mean, that's just going to get worse now.
So, I guess what we're coming towards, I guess, is the fact that there's so much overcapacity that prices will always remain low enough, despite any tariffs or safeguard measures that you put in place. Markets will always remain at risk from that overcapacity.
Yeah, so imports will always still arrive.
Yeah, yeah.
Yeah, and we're speaking to a customer just the other day, and they were asking, is this overcapacity still going to be an issue later on this year? Is it going to be an issue next year? And this is going to be an issue for the next 5, 10, 15, 20 years. This is not going away quickly unless there are big announcements. And what that means is if there would be big job losses. There would be lots of plants closing down. For this to go from an overcapacity situation of the scale it is, I think what was it, 160 million tons of overcapacity the OECD was estimating by next year. That was more than's produced in Europe every year.
Well, that's the increase. So I think it's roughly like
that's the
500
increase.
500
Okay.
million, and then it got to sort of like 680, 700 million. So yeah.
Yeah. So
huge
this
amount.
is a long-term trend.
Yeah, we hear that number from Eurofer and other industry associations quite a lot, don't we? Rightly on their guard and highlighting those issues with government. So ultimately, Kaye, we expect this pressure to persist unless there's a dramatic turnaround in demand in key steel consuming markets. The price pressure is going to remain for some time to come.
Yeah, I mean, we don't expect a major spike in prices, not like the ones we've seen, for instance, in previous years, like, 2020, or I mean, we saw previous ones, 2016, 2008, for instance. We're not expecting big run up in prices. We might see a bit of an uptick in 2026, maybe, as the global economy starts to pick up. We don't expect anything crazy, to be honest.
And in terms of the contacts that we speak to, it's an advantage for some steel buyers at some point who can generate some demand, but for the steel makers and the traders, it's really tough times, isn't it?
Yeah. And there'll be certain sectors, obviously, that will do better than others, and there'll be certain countries or regions that will have those differences in prices. So I think what it is, we'll see some divergences in prices where, one region or one country will do better than others. We'll see some decoupling of pricing, and we'll see bigger gaps between the regions going forward, I think, and there'll be bigger trade measures coming in, and more trade cases going forward. Global trade will continue to reduce, as we've seen. It's just a trend now that seems to be growing.
Yeah, the demand for those measures to at least attempt to fend off oversupply will continue, won't they, I'm sure.
Yeah. I mean, we saw, for instance, freight rates jump up recently following, the reduction in the tariffs from China to the US. It does make me wonder if they may now fall again following the 50% tariff, just on steel and aluminium. So that could be another one to watch, because we did see a bit of a spike recently in the freight rates, in the containerized freight rates.
Fascinating. So not something that's going to go away in a hurry.
No.
Guys, I think we should wrap up there. I mean, it's a really good discussion, and one that I'm sure we'll be revisiting in future podcasts. Everything seems to fall back on the amount of steel that's being used and ultimately how little is being consumed at the moment, doesn't it? But Ewan, thanks ever so much for joining us. I'm sure we'll see you again soon. Jon, thanks for returning. Good to see you in your familiar spot. And Kaye, again, I hope to see you back in the Speaking of Steel podcast studio soon. We'll leave it there. Thanks ever so much.